Hello and welcome. If you've ever felt completely buried by life insurance paperwork, you are definitely in the right place. Today, we're going to crack that code step by step, and we'll be using the fantastic work of Dr. Sedinger's SG to turn what looks like a paper maze into a nice, clear path.
I mean, let's be honest. Does the very thought of applying for life insurance just give you a headache? You're not alone. It feels like you're staring at this mountain of forms filled with confusing jargon. It can almost feel like it's designed to be complicated. But don't worry, we're about to make it all really, really simple. So here's our game plan. We're going to tackle this in 5 clear stages. First, we'll follow the application paper trail. Then, we'll decode your actual policy, the rulebook. After that, we'll talk about how to keep your policy active, look at some special rules for making changes, and then we'll wrap up with a consumer superpower that you absolutely need to know about. All right, let's dive right in. Section 1, the application paper trail. You can think of this as laying the foundation. These are the key documents that you're gonna have to give the insurance company just to get the ball rolling. So this is basically the essential checklist for your application. It all starts with something called a prospectus, and it finishes up with your proof of identity. We're gonna break down every single one of these steps so you know exactly what it is and, more importantly, why it matters. First up is the prospectus. The best way to think about this, it's the official menu for the policy. It lays out everything, the good stuff like the benefits, but also the terms and, crucially, the exclusions or what's not covered. This is the document you study so you can make a smart choice before you sign on the dotted line. Next, we have the proposal form. Now this is the big one. It's your official application, and it is the absolute bedrock of the entire contract. Every little detail you put on this form is considered material information. That's a fancy way of saying it's a fact the insurer uses to decide if they'll cover you and for how much. So being totally accurate here is, well, it's everything, because it's all legally binding. Okay, this next one happens behind the scenes, so you probably won't even see it. It's the agent's confidential report. Your agent is kind of like the primary underwriter. They're the first line of defense for risk assessment. They write up a report on your lifestyle, your job, your finances, all to help the insurer avoid something called adverse selection, which really is just a technical term for accidentally insuring someone who is a way higher risk than they look on paper. And that brings us to this really fascinating concept called moral hazard. Now, this isn't about your physical health, like cholesterol levels. This is all about your character, your intentions, your conduct. It's the risk that someone might take out a policy with, let's just say, bad intentions. And Dr. Sedinger's work gives us this absolutely chilling real-world example. A man insured his wife for a huge sum, but his only intention was to murder her and collect the money. It's horrifying. Thankfully, the police caught on and he was arrested. This is the most extreme kind of moral hazard, and it's exactly what insurers are trying to screen for. And finally, the last part of the application trail, you'll provide your KYC and AML documents. This stands for Know Your Customer and Anti-Money Laundering. It's pretty standard stuff. Photos, proof of your age and address, things like that. It's all designed to prevent fraud and make sure the financial system isn't being used for illegal activities. Okay, so you've submitted everything, you've been approved, congratulations. Now we move to Section 2, your policy, the rulebook. This is where we break down the actual contract that shows up in your mailbox.
The very first piece of paper that proves your policy is active is the first premium receipt, or FPR. This little receipt is so important. It's the official signal that the insurance company is now on the hook. Your coverage has officially started.
When you get that full policy document, wow, it can look dense, but it's really just made of these 5 main parts. You've got the preamble, which connects everything back to your application. The operative clause, that's the heart of the deal, the main promise. The schedule has all your unique info. And then the provisions are just the general and specific rules of the game. So, your policy is active. Great, but now you have to keep it active. And that brings us to Section 3. This is all about making payments, understanding grace periods, and knowing what second chances you might have. Please remember this number, 31 days. This is your standard grace period. Think of it like a built-in safety net. It gives you an extra month to pay your premium after the due date. And here is the really crucial part. If a claim needs to be made during this grace period, it is still payable. That's a huge deal. So what happens if you miss the grace period too? Well, your policy officially lapses. That just means the coverage stops. But it's not always the end of the story. Insurers usually give you what's called a revival window, often up to 5 years to bring that policy back from the dead. But reviving a policy isn't exactly automatic. You've got to pay all the premiums you missed, plus interest. And you might also need to provide proof of continued insurability, which is just the insurance company's way of saying, hey, you have to prove you're still in pretty good health and your risk level hasn't skyrocketed. A life insurance policy doesn't have to be set in stone forever. So Section 4 is all about the special rules and changes you can make. It's about how you can adapt and even use your policy while you're still around. Okay, this next point clears up a massive area of confusion for people: nomination versus assignment. It's actually super simple when you boil it down. Nomination is about who gets the money. That's it. You're just naming the person who receives the check. You can change it whenever you want. But assignment, that is a whole different ballgame. Assignment is about who owns the policy. You're literally transferring ownership to someone else. They now control everything, and it automatically cancels any nomination you had before. And did you know that some policies can work a bit like a savings account? Over time, they build up something called a surrender value. It's basically a cash amount you could get if you canceled the policy. But instead of canceling, you can often take out a loan against that value. It's a way to get your hands on some funds while keeping your insurance protection in place. We have saved one of the most important rights you have for last. Welcome to Section 5, your consumer superpower. And this superpower is called the free look period. Just think of it as your personal cooling off window. Regulators make sure this is included so that you have time to really read the fine print after you've bought the policy, with zero pressure. And here is the magic number: 15 days. The moment those policy documents are in your hands, a 15-day clock starts ticking. You have that time to go over everything. If you find something you don't like, or you just change your mind, you can return it and get a refund. It is your ultimate consumer protection safety net.
So there you have it. We've walked through that whole paper trail, from the first application form all the way to your rights as the owner. These documents might look complicated, but now you know each one has a very clear purpose. So the real question is, now that you're armed with all this knowledge, are you ready to open up your own policy's rulebook and really understand the rules of the game?